Hello, and thank you for joining us today for this tutorial. Today's topic, we're going to be covering bars, restaurants, and taverns coverage. My name is Carly Rahm. I'm the marketing representative for Griffin Underwriting. During this tutorial, we'll go over a brief introduction about Griffin Underwriting Services, otherwise known as GUS. We'll touch on some of our top appetite. We'll talk about property coverage, general liability coverage. I'll give some claim examples, some telling tips, and then some quoting instructions. As with each one of these tutorials, I'll end with a contact sheet should you have any questions at a later time. So Griffin Underwriting was founded in 1928. We still are family owned and operated by the Griffin family. We were one of the first surplus lines brokers in our region to be granted binding authority by Lloyd's of London. We had just over 100 employees throughout 3 different offices in the Pacific Northwest. We can offer solutions for personal lines, commercial lines, transportation, as well as brokerage insurance. We've written over $95 million in premium to date, and we are licensed in all 50 states, including the District of Columbia, so that allows us to work with agents nationwide. If you're unfamiliar with the surplus lines markets, or admitted versus non-admitted, this little illustration kind of helped me when I was first learning the insurance world. So if you think of all of the market share that's out there, sitting in a box that's on your desk, and inside that box is a ball. Within that ball is the admitted market share, or the standard markets. The space in between the ball and the box is the non-admitted or non-standard market share. That's where we reside. So you as an agent, if you can't place a policy within the admitted or standard market share, i.e. inside the ball, that's when you would come to us outside the ball. Basically, we exist so that business does not walk out your door. When we're talking about bars, restaurants, and taverns, our appetite is best suited for small to medium-sized bars, restaurants, or taverns. They have exposure with a total gross sales under $2 million. We can consider those larger risks on an individual basis. It will go to our brokerage team. We're able to write those new businesses. Maybe there's a claims history or a loss history. Maybe it's a unique risk. So maybe they've had, liquor violations. Maybe they brew or distill their own beer or liquor. Maybe they have some outdoor seating. Maybe they offer some live entertainment like bands or karaoke. Maybe there's a dance floor. In the area where we're located, the Seattle area, a lot of our buildings, they're older structures and higher protection classes. Some of them have limited updates. We can consider those risks as well. What we consider those older structures is about 25 to 30 years or older. Some common exposures, obviously the building, any tenant improvements or betterments, business contents, kitchen equipment. Maybe there's an auto that's used for business purposes, business interruption, and then stock and inventory. Common perils for this particular type of risk: hostile fire and smoke, water damage, natural disaster, theft and vandalism, accidents, criminal acts, and spoilage. We're talking about coverage, building or tenant improvements or betterments. They need to be listed on the declaration. It includes completed additions, fixtures, or permanently installed machinery. Newly acquired property, we offer limits up to $250,000 within the first 30 days or cancellation, whichever comes first. When we're talking about contents, it has to be located within the building or within 100 feet of the premises as listed on the deck page. This can include furniture, equipment, stock, any tenant betterments. We do offer limits of $100,000, which are included, or 30 days within acquiring these, or cancellation, whichever comes first. And then debris removal. This is the expense to remove debris or covered property by a covered cause of loss. So this form includes 25% of physical loss to covered property within the limit. So for instance, if you have a policy with a $1 million limit and you suffer a $500,000 loss, 125 of that would be dedicated to debris removal. Some common exclusions for this particular risk: ordinance of law, business income, dishonest or criminal acts, mechanical breakdown, earth movement or DIC, artificially generated current, and utility services. You'll see that the first 4 can be added back on. Others can be covered through a different policy. Some optional coverages for the property. We've got business income and ordinance of law. So business income covers the covers the loss due to revenue and extra expenses incurred. So this could be rent, it could be payroll of key employees, leasing of new equipment, hiring temporary employees, additional advertising. Typically, the most common method is on a monthly limit. So this is an agreed amount with an agreed maximum period, and this is established at the beginning of the policy term. When we're talking about ordinance of law, this covers the damage due to an enforcement of laws or ordinances. There are coverages A, B, and C. What's nice about this is you don't have to get all three. You can choose the ones that are most applicable to your insured. So you can have coverage A or coverage C. You can have B and C. You can have just one, either A, B, or C. It basically gives $10,000 or 5% of the building limit, whichever is lower. We've got equipment breakdown as well. This covers damaged equipment and related losses. So some common causes are a power surge, electrical arcing, rupture and explosion. It covers the property, loss of income, spoilage, pollution cleanup, removal, expediting expenses, computer equipment, valuable papers, and data restoration. What's important about this is the accident needs to be sudden and accidental. So common wear and tear or slow wear and tear is not, this would not be a covered cause. It needs to be sudden and accidental. Crime and employee dishonesty. This covers damages due to criminal acts. So employee theft, forgery, alteration, robbery, burglary, computer fraud, theft or disappearance of money and securities. The limits are scheduled on a supplemental declaration page, and the discovery or occurrence versus sustained loss or claims made, those are the two forms that this coverage is written on. Common exposures for general liability for bars, restaurants, and taverns. You've got premises, you have operations, products, completed ops, medical bills or medical payments rather, and advertising injury. So when we're talking about the premises, wet stairs inside a nightclub causes a patron to slip and fall, causing some bodily injury. When we're talking about operations, maybe a server accidentally spills hot grease on a patron, as well as her brand new Gucci purse. This can cause some BI as well as property damage. When we're talking about products, a bar distills their own liquor for resale. Maybe a customer buys this liquor, consumes it, and then turns ill from a bad batch. Completed operations, a bartender accidentally mixes toxic fluids into a drink rather than using consumable liquids, and their patron turns ill, causing bodily injury. We're talking about medical payments. The patron injures his head on a sign that is installed to goad, but still requires stitches. So this is that good faith coverage, what they call good faith coverage, that medical payment coverage. And advertising injury. Maybe the bar owner uses pictures on their Facebook page to promote a club, but they didn't get permission to use said pictures. We're talking about coverages. We've got Part A, Part B, and Part C. So Part A is the BI and PD. Part B is the personal or advertising injury. And then you've got Part C, that medical payment, as I said, the good faith. So Part A, it covers the injury, sickness, or death resulting from injured operations or damage to tangible or intangible property. Part B, personal or advertising injury arising out of false arrest, malicious prosecution, libel, slander, invasion of privacy, copyright infringement, etc. And then those medical payments in Part C covers the third-party medical on premises. The insured does not have to be legally liable for this coverage to kick in. It just helps to maintain their reputation and decrease litigation costs. So common limits we see, $1 million with a $2 million aggregate. We can go as low as a $300,000 with a $600,000 aggregate. It's important to talk to your insured to see what their limits, what their needs are. But as I said, commonly we see that $1 million with a $2 million aggregate. Some common exclusions, expected or intentional injury, liquor liability, employer's liability, pollution, auto, aircraft, and watercraft, intentional and criminal acts, assault and battery, and punitive damages. A lot of these exclusions can either be endorsed back on or it can be covered through a separate policy. Liquor liability is a perfect example. starting with liquor liability. It's an optional coverage. It covers the BI and PD resulting from liquor service operations. So some common causes contributing to intoxication of any persons, furnishing alcohol to a minor, violating any statute or regulations on the sale of alcohol. We've got dram shop laws. It shifts the legal responsibility to the bar owner for BI and PD to a third-party cause by or related to the above. Washington State is a good example. We do have dram shop laws. We can offer limits 1 million with a 2 million aggregate, and they are inside the policy aggregate term. Assault and battery, this covers the third-party BI resulting from patrons or employees. So we've got assault, we have battery. When we're talking about assault, no actual bodily injury contact, only the threat, and the act is intentional. When we're talking about battery, physical contact with another against their will, so like restraint or a bar fight, punching, that sort of thing. Damages include medical payments as well as mental anguish, and there is a sub-limit within the GL limit. Typically it's about $25,000 with a $50,000 aggregate. Hired and non-owned auto. This covers the BI and PD resulting from an auto accident. So when we're talking about hired auto, it applies to the rented, lease, or borrowed vehicles for business. The non-owned auto, this applies to the employee's personal vehicle when used for business. The average cost for this coverage is about $300 for $300,000 in coverage. Stopgap employer's liability. It covers claims outside of state workers' compensation. So remember, we do not offer workers' compensation. We do have an optional coverage for stopgap employer's liability. Consequential injuries to an insured employee's family, so loss of service or consortium. Intentional acts of an employer, so the sole purpose of an intentional act cannot be the cause of harm or injury. So an example would be exceeding equipment life or removing any safeguards for said equipment. And the average cost for this is about $250 for $1 million worth of coverage. EPLI, Employment Practice Liability, provides protection against claims like breach of employee contract, deprivation of career opportunity, discrimination, sexual harassment, and wrongful termination. We also have cyber coverage, provides protection for personally identifiable information, so like employee information, credit card information, the website domain, etc. We have some great coverages at really competitive pricing for cyber, tech E&O, and EPLI. Great coverages, starting as low as $400 for a policy. Here's a couple of quick examples just to kind of get the brain going in how you would talk to your insureds who maybe own a bar, a restaurant, or a tavern. So for an example of property coverage, a fire began in the insured's premises due to a grease fire. The fire caused $20,000 in building damage as well as $15,000 in business personal property. In order to repair the damage, the business had to be closed for 2 weeks. This accident resulted in loss of business income for the insured. So small grease fire, those dollars start to rack up pretty quickly because you've got basically 3 covered causes of loss: the building, the BPP, as well as the business income. When we're talking about general liability, customer took one step into the insured's building, slipped on a rain-soaked floor. The customer sustained a non-displaced fibular fracture and sued the restaurant for $12,000 in medical expenses and lost wages. In this example, the insured was not legally liable. They could have had signs up saying the floor is wet, but it's that good faith that maintains their reputation, that medical expense. Liquor liability. A 19-year-old minor entered the restaurant with an older woman. The waitress did not check the identification of the minor and served them both alcoholic beverages. The minor was later involved in a motor vehicle accident, seriously injuring a man. The injured man sued the restaurant for selling alcohol to that minor. Remember, we talked about that stopgap coverage and DRAM laws. Equipment breakdown on a premises power outage occurred, causing the insured's freezer to shut down and the food in the freezer spoiled. The equipment breakdown claim was made for $5,000 for spoiled food. Remember, in this example, it's sudden and accidental. It's not that regular wear and tear. EPLI, a customer claims that a waiter made inappropriate comments during a service. The claim was filed in the amount of $150,000. Remember, it's that sexual harassment coverage under the employment practice liability. And then finally, cyber. The POS system is breached. Customers' credit card information was taken. The breach expenses including forensic, notification costs, defense costs, and the total was $36,000. It's a pretty low number when we're talking about data breach. So some selling tips. Again, think about how you can make this tangible for your insured. Use claim examples. Find out what type of operations. You know, if they just have a little mom and pop restaurant, you're not going to use examples for a bar and vice versa. Pointing out various exposures and the costs associated with them. Remember, this product is for small to medium-sized businesses. A lot of businesses have to shut down after one claim because they can't sustain the financial burden of either loss of business or the cost of the claim itself. Take advantage of the coverage gaps by cross-selling other endorsements and policies. Talk about cyber coverage. Talk about that EPLI coverage. Talk about liquor liability coverage. You know, make sure that they're fully understanding the coverages and the exposures that they have. And then have the insured sign a coverage rejection letter. Have those conversations. You can advise them, but you know, maybe they're not in the position to either get that type of coverage or they don't understand how important it is and they decide not to get it. Have them sign that coverage rejection letter. That way you're protecting yourself as an agent. Down the road, should they experience a claim and they find out they don't have coverage, they can't come after you and say that you didn't have that conversation or tell them they needed that. And then always follow up after binding. I really urge agents to have conversations with their insureds, not just at the time of signing their policy or renewing their policy, especially when they're dealing with commercial. Your customers have businesses. Businesses are in place to grow and to thrive. They don't just do that once a year. So check in with them every 3 to 6 months. See how they're doing. Have they made any changes? Did they get new equipment? Have they expanded their business? You know, there's a lot of things that can change in a span of a 12-month policy term. So check in with them on a regular basis. It just shows them that you have their best interests in mind and you want them to be adequately covered. When we're talking about quoting bars, restaurants, taverns, this is a risk that does require supplemental application. We need those accords 125 and 126 if you're just wanting CGL. We also need that bar, restaurant, and tavern application supplemental. You can find these on our website. If you want commercial property, we also need that accord 140. Liquor liability, if you want liquor coverage, we can group those all together in a package or we can do standalone. If you need help as to what applications are needed, by all means, reach out to us, please. We are so happy to help and get you everything that you need. You can find these applications on our website. If you don't want to spend the time to look at our website, reach out to us. We'll email them over to you. Once you get everything completed, submit them into submissions@gogus.com. We'll get that into our system. We'll assign it to an underwriter and we'll start working on your quote. If you have any questions at a later time, need assistance or anything like that, please don't hesitate to reach out to us. If you're an Allstate agent, email us at csr@gogus.com or you can call us. If you're a non-Allstate agent or an independent agent, email us at info@gogus.com. Again, my name is Carly. I'm the marketing representative. You can reach out to me directly. I'm always happy to help. We want to thank you so much for working with us. I hope that this was helpful and we will see you or talk to you at the next tutorial. Have a great day.